Hey everyone, welcome back to the Mark Loeffler Experience. I think we got the best show ever for you today. Today I'm going to be talking about, should I sell my primary house and rent? I know a lot of you guys out there are saying, well, it's not fair. A lot of people can't buy homes. And Mark has this huge problem whether he should sell his primary home and then just go ahead and rent. Let's look at it. As you can see, I'll post this up on the screen. This is the premium paid to own rather than rent. This is condo as compared to an apartment, but to be honest with you, it's not much different. I can rent my same house cheaper than it costs me to own it. And I can take up the massive liquidity that I've got, the equity in there, and go invest it and make a great return that might be better or worse than what the real estate market's going to do coming up. And we're going to go into that a little bit about how that's maybe determining my decision. And, comment down below. Let me know what you guys are doing. But yeah, you can see here that in Vancouver, to own the condo is $1,500 more per month. Toronto, it's $1,100. Victoria is $1,000. Montreal is $900. Hamilton, almost $700. Halifax, $500. Quebec, $400. Calgary, $260. Ottawa, $220. Regina, Edmonton, St. John's. You can see that. And actually, it's cheaper to own rather than rent in Winnipeg and Saskatoon. I'm just going to put it out there. I understand that one of the biggest tax benefits we can get, or tax loopholes we get as Canadians, is our primary residence zero capital gains, right? Saying that, is it worth not getting that capital gain deduction and investing the money somewhere else, obviously at a taxable gain? So, you guys got to do the math yourself. I'm happy to talk to anybody. If you want me to help you do the math, happy to talk to you guys about it. Yeah, you can just see from the graph. If I was in Vancouver, 100% I'd be renting right now. And I'd be taking that $1,500 a month extra, and I'd be putting it, number one, if I wasn't an active investor, I'd putting it into an index fund. Number two, if I'm an active investor, I'd be doing it in just buying stocks, dividend stocks, or if I'm doing options, I'd be doing options. Far and away, I'd be buying real estate in other areas that I can go ahead and probably do a full BRRRR on. If you guys haven't seen the BRRRR video, I'll link that down below. It's from a long time ago. And I'd be going to some of these other markets where it's pretty much even or close to even to rent to buy. Well, here, you can see it here. So this is the numbers from January 2005 to January 2021. You can see that obviously Victoria, so Vancouver Island's gone up 3 times. Victoria is about 2.5. Lower Mainland is about 3 times. Vancouver is closer to 3.5. Fraser Valley is closer to 3.5 times. Chilliwack, 3.5. You guys can see that. But you can go to Calgary. It's up 100%. Edmonton's not even up. And you can see, look, they had their little run here in 05. So, and beginning of 05 into 06, and Calgary is just above that right now, and Edmonton still hasn't got back to its peak in 06. So, this is kind of why I'm investing there right now, because I think we could see another little run there like that. That's just my opinion. Don't quote me on that. Obviously, do all your own due diligence before you invest. Saskatchewan, obviously, they had that same little bump, but, they started at a lower price. So they're up still 2.5 times. Same for most of Saskatchewan, about the same. Winnipeg is up close to 2.5. And then you come to Ontario. And I think the worst areas are maybe like, let's see. These are all 3.5, 4s. Some of the smaller areas, 3.5. Kitchener, obviously, from 200 to 742. Obviously ridiculous. Anybody who's invested in Ontario in the last 16 years, you're a genius. You've been looked like a genius, because, there was that little blip when the stress test came in, and that was about it. Other than that, we've had this run up. That's another reason. Should I be taking money off the table in Ontario and going somewhere else with it? Because obviously I still have a significant portion of my net worth tied up in real estate in Ontario. I think this is pretty telling though, of how markets boom and bust. I mean, you see Oakville, Milton, and you got a huge run up into the stress test, and then you see that's probably one of the bigger cliffs, Mississauga, and now you can see where we're at again into running up into this new stress test. I don't know. It's just, I'm wondering if we're going to, are we going to see that little dip? So do I get out ahead of it and go ahead and rent because it's cheaper monthly anyways, and I obviously don't have the same costs, maintenance costs, that type of thing. Yeah, I mean, this is the internal struggle that I have, and I know a lot of people have commented on a lot of my stuff, and they ask the same question. In my opinion, unless you're in these areas where, Moncton's just started to really go up. It's kind of had that steady progression over the time. No stress test didn't really bother it. St. John's is still off its all-time high. Newfoundland. I mean, here's the thing about going to those areas, obviously, is economic fundamentals. If there's no jobs, people don't want to live there, house prices won't go up. It's a supply and demand issue. And at the end of the day, people do want to live in Ontario. Here's Montreal for our good friends there. You know, you're up about 2.5 times as well. Toronto's 3 times. You know, here's Ingersoll's up almost 4 times. Tillsonburg. This is what goes through my head. Do I sell out of everything in Ontario? Probably not. Do I sell my primary residence and maybe go rent? I mean, I would kind of like to. I think it kind of makes sense to do at this point. I don't have a crystal ball, but it sure feels like now would be a good time to do that. I don't know. It feels like this is going to turn into this again, right? And, you know, it's only when you've had that huge run up, which, to be honest with you, every place in Ontario said that run up. That's going to be affected by these stress tests, but only if we get increased interest rates over time. As we saw before, you know, we had that little blip and then it just continued to power right through because most people realized the stress test wasn't all that bad. They're like, I still qualify. So again, we did that video on Monday on the stress test. What's that really going to mean, right? I don't think it's going to mean much until we have higher interest rates, but I think we're going to see those. The future generation's not going to be able to buy a home. I always say to that is, well, maybe it's not the right time to buy your principal residence. Maybe it's a time to rent and go ahead and buy investment properties. Learn to invest in stocks. Grow a business. Yes, I understand that for the majority of Canadians that building wealth is tied up into their primary residence. One of the big purposes of this channel is to tell you it shouldn't be. It should be tied somewhere else. And that's a nice little bonus. Yet at the end of the day, you should be building a side hustle, buying rental properties for income, learning how to buy stocks for, you know, long term, or, you know, do derivative trading, like options trading, like I do, and I do hold stocks for the long term as well. But these are things you should be learning out there instead of counting on your primary residence to be your retirement plan. That is not a plan, it's a default. I mean, I haven't drawn that conclusion yet, and I also haven't convinced my wife to make this move. Maybe this video will help. I don't know. Anyways, thanks guys. We'll catch you in the next one.